What do we get from all this? And here is the answer. That's a tweet which has been sent out a couple of months ago, where somebody wrote, somebody has sent $500 million worth in Bitcoin last night with just a few clicks, total costs $15 transaction fees, tried it with gold. That's the benefit of Bitcoin. You can transport value from one point of the globe to another point, peer-to-peer, point-to-point, with very low transaction costs, and you basically can transport or transfer this value in a way which has never been possible before. And even more so, because the architecture is defined like this value transfer in Bitcoin or in Ether, it doesn't matter, Bitcoin or Ether, this value transfer is happening in an unstoppable way. This transport is happening in an unstoppable way, and the possession of this value is also unstoppable. What do I mean here? With the private key architecture, this has been designed in a way that Bitcoin cannot be confiscated. Why is this? When the Bitcoin is held by an exchange, then you can ask the exchange to you the Bitcoin to you as a government, for example. But in case you're withdrawing the Bitcoins or the Ether to your private wallet, then you are in the possession of the private wallet, and nobody can take the Ether, the Bitcoins, and other things from you. And now you will learn this also in the next couple of days. You can memorize the password in your brain, so you don't have to store it on a USB wallet. So in case you're memorizing the Bitcoin password, the private key in your brain, then it's absolutely safe from seizure and confiscation, right? And with this, it's fascinating because Bitcoin, by design, is the first unconfiscatable asset on the planet in a digital way. You can take somebody's houses, gold, and other valuables, that's easily possible, but with Ether and cryptocurrencies, people have invented unconfiscatable assets. It's fascinating if you think about it. This discussion came to us after the Ukraine-Russia war, because since then we now know that even on the central bank level, assets can be seized and taken away. Yeah, we have seen it now. And now I think it's interesting to basically also discuss this property of crypto assets, not a Bitcoin thing, this property of crypto assets that things theoretically, in case custody is done nicely, cannot be taken away anymore. That's the benefit balanced via the crypto asset. And in Bitcoin, it's the balance against the electricity consumption. With Ethereum, you don't have the electricity consumption. And why do people now more and more start to investigate Ethereum, Bitcoin, crypto assets, and so on? The reason is that our system is getting a little bit shaky here and there, and it started last year with rising inflation. At that point of time, this map has been drawn, and in red you see those countries where inflation is 10% plus. Where are we now in Europe? We are also above 10%, so now you could color entire European Union. And the Baltic countries know it better than me, is basically even at 18% plus or 20% plus. Yeah, that's high inflation. At that point of time, 1 year ago, it was a couple of countries like Turkey, Argentina, Brazil, and so on, who had high inflation. Now inflation has spread. What you see here is the first year of Corona. At that point of time, inflation was not an issue, but inflation was already enshrined in the mechanics of the system because people did not consume enough. This led to supply chain issues, excess demand here and there, and governments around the world have spent more money than they collected through tax, leading to budget deficits on the country level. And how are budget deficits on the country level financed? By issuing bonds. And who purchased the bonds in case private investors are not there? The central bank. The central bank creates money and then uses this created money to purchase the bonds. Money is being transferred to the government, and government can spend this money because tax income is too low. I don't say that this is bad because in this point of time, I think it was required on behalf of the government to also create this kind of subsidies, because otherwise we have lost our entire infrastructure in the lockdowns. You know, restaurants, all this stuff might have shut down in case they would have not gotten subsidies from the government, right? But still, it might have been required, fair enough, but still spending was too high, bonds have been created, money has been created. We see the balance sheet of the central banks skyrocketing, and that's the result. You have rising inflation rates, not just in one region of the world like Europe, but in basically any country in the world. Here you have still good figures, that's 1 year ago, still good figures in Japan, China and Switzerland, but also in Switzerland inflation is now rising, China also. And on the right side here, the highest inflation number was approximately 6-7%. Now we know what happened. We are now above 10% in many, many countries. So what you see here is that's not an issue of one system here and there. It has something to do with the entire money system and central banking authorities together with governance leading to too high expenditure tax income which did not increase adequately. And that's basically the situation we have become in. Inflation rates are on the rise and central banks are forecasting inflation rates to be 2% in the future. You have to read this chart as follows. That's the US figures. You see here that at any point in time, at any month, central bank, the Fed in the US estimated the future inflation. That's the dotted lines. So in case you put all estimations in one chart, then you see that all forecasts for the inflation rate somehow should drive the inflation down to 2%. But you also see how reality played out. That's the blue curve and the green curve, meaning that the inflation rate has been as close as 9%, and now we are back luckily to 8%. But you also see that the estimations have been dramatically wrong. Is the US are having issues with this? Not necessarily, because they have the power to increase interest rates. We see this currently. And the rule of thumb you have to make is you have to create the difference between interest rates and inflation rate. So inflation rate in the US 8% minus interest rate 5%. The difference is 3%. So 3% real yield loss per year. That's what you can do this for a couple of years, 3% per year. But I think Europe is really a little bit in danger, because in Europe we have 10% inflation rate, maybe increasing because of energy stuff, and inflation and interest rates is as low as I think 3% plus minus. So the difference is 7%. Yeah, and that is something you should not do too long with an economy, because it's 7% loss of real yield per year. Yeah, that's basically value taken out of the economy. That's really a little bit dangerous, and therefore let's really hope that our politicians are doing wise decisions, because otherwise it can get, I don't know, economically speaking, a little bit messy when inflation rate doesn't go back again. But the US will make it. With Europe, I think skepticism can be mentioned, because inflation might stay with us for quite a while. So talking about Bitcoin again, where is adoption going? That's now your question. That's a screenshot I took in March when President Biden said that he now wants to regulate crypto assets, everything, Ethereum, everything. So what Europe has been done at that point of time has been at the agenda in the US. And here I highlighted this red sentence. Why? Because this red sentence says that 16% of the adult US population, that's 40 million people, are owning crypto assets, Ethereum and so on and so forth. And I personally was surprised that this sentence was stated in the first paragraph of this announcement. It wasn't a footnote. It wasn't played down or at the end of the article. No, it was very boldly written in paragraph 1. And that's why I screenshotted it, because I think it's interesting to see that the US are now, same as in Europe, acknowledging the diffusion of crypto assets, not Bitcoin, everything with regards to crypto. And therefore, they created this motivation to also regulate the space. And that's basically where these 200 million come from. 40 million in the US, 40 million in Europe. Then you have people in Africa, South America and elsewhere. That's how you can sum it up to 200 million right now, with an increasing tendency. Some of you guys work in banks, and banks are also capable of learning, of course, it takes a while. On the left-hand side, you see press quotes from years ago, and on the right-hand side, you see press quotes at a later point in time. Let's go in. Here, for example, JP Morgan said Bitcoin is a fraud that eventually will blow up. And a couple of years later, it reads as follows: JP Morgan says investors could validly make Bitcoin 1% of their portfolio. You see here, don't mean this cynically in any way. Please don't misunderstand me. That's learning on an organizational level, because everybody is skeptical in the beginning. People then dive into crypto and all kinds of things. And at some point of time, they are getting more neutral, lose their stigma, and here and there find interesting aspects to work on. Same with Goldman. Goldman lists 5 reasons why Bitcoin is not an asset class nor a suitable investment. And here, Goldman says it restarts cryptocurrency trading desk in the middle of the Bitcoin boom, right? And this goes on with PayPal and Visa. And there are many news having come up in the last couple of months where you really see adoption taking place with BlackRock, German banks, European banks, Swiss banks, US banks, South American banks, and so on and so forth. It's really fascinating. So what happens here? They are building on-ramps for traditional money of investors who might want to invest into crypto assets. So there will demand being piled up here. Yeah, that should be realized next year. Crypto funds. I will only show this slide here. That's a joint study with 21E6 Capital, where what have we done here? We have analyzed a standard portfolio of 70% equities and 30% bonds, and then depicted down the return over close to 10 years. That's the blue curve. Then we have taken this standard portfolio and we added 4% of crypto assets, Bitcoin and Ethereum. And what happened then, you see the green curve is moving upwards. That means that the return is getting better. But you have a high volatility with regard to crypto assets. Therefore, you should not add too high crypto shares into your total investment portfolio, because in case you're adding too much crypto, then the high volatility creates too high drawdowns. So the drawdowns are depicted in the middle, and you see here that the drawdowns of both portfolios are roughly similar. That's the blue and the red line basically wrangling around each other. You see this very nicely here. What does it mean? It means that the ideal share, mathematically speaking, the ideal share of crypto exposure in a total investment portfolio is approximately 4% plus minus, because then you can get a higher return, but at the same time, the high volatility doesn't crash your portfolio metrics. That's pure statistics. That's why I wanted to show it to you. And you also see here the Sharpe ratio, that's a risk-adjusted return metric, increases from 0.78 to 1.19. That's a good sign, because Bitcoin here, together with Ethereum, adds a nice crypto add-on to a financial portfolio. That's something I jump over now. And now let's coming to an end now, very soon. Is there an issue? Okay, perfect. Now it works again. I just saw on the screen here some issue.